Good morning, everyone, and welcome to the European crossover webinar. And we just got some data going to come in right now on the Eurozone flash PMI. Came in 47.8, a little bit better than expected. We actually just got knocked down just a few moments ago. I posted that data in the room on the German data. Actual came in at 44.5. Reuters poll had been for 45. That's what we saw, this down knock, and we'll continue to see this knock here. This is probably has more to do with some stops at the moment now. Well, I mean, we've already known about the reinforcement of this German data continue to come in weaker. I've been saying for most of the week is I still think the jury's out, and here's the dollar index. For the, people have been quick to want to knock off the dollar, and I just think that there's still one more pop here, and obviously we're seeing it right now. I think right now more to do with just some stops being hit. Where people have been long the euro, thinking it's going to go higher. And my contention has been all along is that although technically the dollar could slide back, you're looking at technicals. One of the things we talked about is that when we look at the euro, and we'll just take a quick look on here, this data, we came in at actual was flash PMI was 45. They were expecting, flash PMI poll was 45. They actually got 44.5. The prior had been 44.1. So you can say, well, it got just a little bit better. But I mean, look how poor this is. I mean, above 50 is expanding, below 50 is contractionary. And we talked about this before. Remember, then it was at 48, and then not only did it drop below 48, it dropped even below 45. So it was accelerating to the downside, and not only accelerating to the downside, like really pulling away in a big way from the 50 level. So we've talked about this is that, of course, as we know, the Germany's, and look, we'll continue to still move a little bit lower. Germany's considered the engine of the Eurozone. So certainly this is just, cemented this idea that it's really struggling, that the Eurozone is probably gonna have to try, ECB is gonna have to figure out more in different ways, and Draghi, point out some things, but obviously the euro would come from those lows. So people are thinking, okay, we're really gonna go on and take off. Now we got the actual Eurozone itself, and they're looking for 47.9, came in at 47.8. We're going to move this out of the way, and one of the things I was referring to, because we're thinking, for those of you to say, you know what, news doesn't matter, I only just trade on the technicals. Okay, then that's fine too, because my concern has been here, one of the things that we talked about, last week when we were talking about, hey, this euro needs to get above 1360, and I was talking about 1260 here on the daily, and we got above it, but we were saying, hey, look, it's not out of the woods until it gets above 1291. And that's where it'll open the door for us to go and move higher. Let's say those just technically speaking. So we got that opportunity, and in our Asian analysis that we kicked off the week, I said, hey, look, we closed above 1291, albeit by only 7 pips. And that was my thought. It's like, come on, you finally, it's not like it just came out of nowhere from, let's say, 1220 and closed above 1291 at 1298. It already been pushing up against beyond this 1260. And then it finally pushes up, and it doesn't do much with it. And then we're saying, okay, now let's, one of the guys had asked, well, what happens now? And we're saying, well, look, it didn't close much, but it did close above 1291. That, opens the door for them to move higher. And it's had that opportunity. It's, spent most of the week trying to, punch above 13. And we say, hey, look, we can hit some stops up in here, but the real resistance doesn't come up until 1356, because anything up in here is just popping around. That's all it's doing. And we'd actually closed below 1291. Remember the day before, not yesterday, but the day before that. And then we came back and we just reclaimed the 1291. Not by much, but we just barely did it. And then here we go, sliding right back down the pole. And that was one of the things that we mentioned on this close that day, was I was saying, hey, look, we just gave up 1291. If we're not careful, we're going to slide right back down the pole, and the market tried to jump up higher later on in the session, and it wasn't much of a recovery was what to speak of. And here we are sliding back down. There's nothing new out of this German data. That's my point. It's not like as if something came out of nowhere and we hit the wires. ECB says this or that. This German data has been going on for literally for a good 3 months. That has been going weaker and weaker and weaker. And now this market, for lack of momentum to generate on the upside, once we've claimed this 1291, is now starting to slide back. So I think right now it's more about people that have just been long thinking, okay, we're finally about ready to take off. We've even had some good banks, even Morgan Stanley said they were looking for a move. I don't remember what it was saying, but the stop was 1170, but they're looking for a much bigger move. And my thing is that I just don't think the jury's out, as I've been saying, yet for the dollar. I think the dollar has, one more run in it to test up here before we knock out some people. And the thing is, the dollar's going to have that bid, because remember, we covered this in the data, was that we have the most amount of bulls since 2016, okay, in COT data. So the point is that those guys and gals are not going away yet. I mean, if they did, then we'd really break hard. So there's still, as long as we hung around here, there's still that opportunity to push higher. And push higher, I think we can still make that move. Remember, there still is this opportunity. Here we are coming, look at that. We'll just continue to just knock off some of these euro stops here. Let's go and get into the cash dollar index. One of the things I like to do is, we're always trying to vary it up a little bit, trying to find ways to, I don't know if you want to call it improve or whatever, is I'll start off the first part of the crossover, just going over the, some technicals kind of going across the board. Obviously right now the euro's moving because of these PMIs that just came out. That's a big driver, as opposed to us usually we'll touch base on. And I see right now is now the dollar mex is popping up in here. Finally starting to see a move here in the dollar mex. So hang on a moment. Boy, this dollar is ripping now. Look at that. You see right up in here, there's still that opportunity for us to challenge that 97.89. And 97.89 is not only a key weekly level, but it's also the 61%. We can pull this out to the weekly. You can see this coming across here. And it's also the 61% of this entire move here. So I think right now, look at that. So now we've even dipped even lower here with the euro. And as I mentioned, I think it's more of longs getting knocked out right now that have put in their stops and said, okay, I think we're going to 14, we're going to 1380, whatever. My stops are going to be at 1280, my stops are 1270, my stops are 1250, and they're just knocking out these people right now. Because it's not like as if, as I said, this came out of nowhere and the market is, like, wow, we didn't expect these kind of figures. This is just an ongoing it's going to be a continuation of this bad German data. And look at this peso is finally starting to pop up in here. So let's go and take a look here with the news. So it says the European Parliament releases new forecast today for the likely outcome of the European Union elections in May, when far-right Eurosceptic movements are hoping to capitalize on the fragility of many of the continent's mainstream parties. The forecast will also include polling for Britain, where a YouGov survey yesterday showed the Brexit party of Nigel Farage ahead with the 27% of the vote, with Labour in second place and the ruling Conservatives on just 15. The poll also underlined the downside of the decision by the three most overtly pro-Remain parties, the Greens, the Lib Dems, and Change UK, not to run onto the pro-EU ticket that scored just 10, 7, and 6% respectively. A separate Financial Times calculation published today showed that a unified state of candidates would win them over by twice as many seats in England as they would if they maintained separate lists. Well, enough of this stuff. This doggone story is about as old as Methuselah. Let's go on and get on to the markets. There's a feeling in the markets that the global economy is just starting to stabilize. So will today's flash market PMIs in the Eurozone and the United States confirm that? Last month, the PMI showed German manufacturing cratering last month. We just talked about that. Remember I told you, is it not only what the prior month had been 48, so when we dropped below 45, down to 44 this last month, I just think, like, wow, this isn't just, this isn't just a little bit below. This is just accelerating to downside, accelerating far away from 50. So last month's PMI showed German manufacturing cratering last month to a 7-year low. So any pickup will be welcome. Well, wasn't much of a pickup. Earlier, there was some good news from Japan when manufacturing activity contracted at a slower pace in April, thanks to a pickup in hiring. On the other hand, new export orders fell at the fastest pace in almost 3 years, implying global demand remains sluggish. There's still hopes of a turnaround, fed by yesterday's better than expected data in China, has helped 10-year German bund yields hit a 1-month high of 10 basis points, rebounding from a 2.5-year low of minus 0.94 last month. World shares have pulled back a touch after Wall Street fell yesterday, pressured by healthcare stocks and mixed earnings. So far, world stocks are on track for a 4th week of positive returns, but that could change if European shares are opening a touch lower and S&P futures are 0.2% lower. The tentative risk on mood has pushed the dollar index down this week after 3 weeks on the black, while the euro is trading just off the 3-week highs after robust Chinese data. Other major focus will be the release of the U.S. report by Special Prosecutor Robert Mueller at 13:30 GMT in a redacted format of 400 pages. The question will be, will there be anything nasty in it for Trump and Russia? Russian markets appear innocuous with the ruble rising after investors poured money into local bond markets. Sterling has been becalmed after the 6-month extension to Brexit granted by the EU. European futures are sliding. And let's see, that's probably enough on that. And we'll just touch base here. There was really no news out of FX. The FX story was from like a few hours later saying the euro steady, and that's kind of a laugh at that point. So I just focused here, which was the key thing that was happening at the time. Struggling German PMI data hits the euro and stocks. German yields fall. European stocks in the euro hit on Thursday after a business survey showed German manufacturing sector contracted for the 4th month in a row, adding to concerns about the sector and pushing investors into a safety of Eurozone government bonds. Activity in Germany's activity services sector rose to a 7-month high in April, a survey showed on Thursday, but investors focus on the 44.5 reading in the manufacturing sector, well below the 50. We've been talking about that, separating growth from contraction, even if it was above the 44.1 reading recorded last month. So here's the thing is, when you look at things in a broader perspective, the prior month, remember, not this last month, but the prior month before, they've been 48. So, we collapse when we just drop down to 44 point when we're saying we're accelerating. So was this just like an outlier number? So if we would have let's say not jump, but let's say we'd gotten up to like 46.8 or something, or 47, they would have thought, oh, that was just an outlier number. It's coming right back, and probably would have seen the euro just start popping up to the upside. But this is just reinforcing what we already saw from the prior month. I mean, not only did we fall into the basement, it's that old commercial, I've fallen, but I can't get up. And so this is, saying, what, this Eurozone is, this isn't like Italy, this is the engine of the Eurozone. So we're really starting to, show that this area is really could be in some real trouble. And if that's the case, but like I said, more so than that, I think that right now it's more about these bulls and people getting stopped out, essentially. That's what I believe it is, where we've dropped, because it's not like as if it's any brand new news. So with that being said, let's go on and move into the analysis. And we had a support of 1260, and that was close. I mean, that's like, hey, if we pull back, and obviously, like I said, we're knocking these bulls out right now in to a certain extent, changing complexion. And I think you have to be a little bit concerned here. You know, sometimes, you know, we react to the numbers and we you know, if it's bullish, we're all talking about, oh, it's pushing to these new highs. If it's bearish, it's now changing everything, changing directions. But here's the thing is that when you look at this over the course of, let's say, the last 10 days, we've had the opportunity to get above 1260, to stabilize, to slow down this downside momentum. And then once we got above 1291 on Friday's close, we have the opportunity to really push higher. And the more logical area, because anything up in here, we remember we did actually have 1329 here, and our high, I think, was 1325. But the real resistance, so to speak, because I want to say where the rubber meets the road, but where they was going to say, okay, this is where the market can push to, you can use that as a target if you're bullish, was going to be up here at this 1356. So we had the opportunity to really start to move higher, and we haven't done anything with it. So if you've been bullish, you know, you've been really disappointed, thinking, okay, I'm right there, I'm at the turn of the corner, things going to finally turn around, they're going to turn around, and then wham, we come right out here, and then this market really comes off. And at this point, it goes back to what we think we've said before, is you kind of put yourself in the other person's shoes, so to speak. So if you're bullish, or if you just got knocked out, or you were thinking about being bullish, you're like, no, I'm not going to come in. How about you guys prove to me that you can hold here, and then I'll think about getting bullish again. Okay, so that's what I'm saying is, so with this type of situation, and reinforced by, like they said, the strongest type of movements are when it's not only technicals, but technicals coupled with fundamentals. Well, we're sliding here, and then it's a reinforcement of this bad German data that even if the euro can hold, people aren't going to get long until they've really tested and proved themselves. And so my thought is that we can still push a little bit low, and the market may want to push back. My thinking is I'd be very surprised if the market would have turned around and come right back up and finish the day like on a hammer or something like that. That I'd be surprised. I mean, I'm not saying it couldn't happen, but I don't see. My whole point is, when we were up in here, is I didn't see the catalyst where we could extend big moves up in here, because you still have in the background the bad German data. That's the problem, is that could we have moved technically higher? Yes. But, and I thought we could have, maybe we could have punched up here in this 1356, but I didn't see a whole lot beyond that, because at the end of the day, you look back and say, wow, I'm still lugging that ball and chain of bad German data, and they're the engine of the Eurozone. So we haven't been able to push higher, and now we're starting to slide back. I'm not saying that everything's all bearish now, but we'll probably have to do a little bit of homework, you know, lower, before we can go and move higher. So we're going to take a look at the euro on a 2-hour. I got this data here at the 1235. If you throw a fib on it, and in a situation like this where the range has been so tight, I don't think that the fib makes that much of a difference. We'll go over here. Well, you got a 61% coming in at 1237, okay, and then got this key data here, 1238. And really, if you look for a real more of a better downside test, it comes in at 1226, and that would just take out this low here. And you see this right here, right there, 1226. We'll go and draw a little line here to accentuate that. Now, we may not get there, but if today, but this is where I think that that's where they would find some support there. And you see how that would just take out the low here? So I'm going to go with 1226. Now, I may not see it today, but I think that that's where potentially we can push here. And we have to flip this back right now to bearish. Because, and the reason is not to jump so quickly and say, okay, and who knows, if they were to return back to 1291, we'd have to flip it back to range. But my whole point has been is that we didn't, when the market had the opportunity to do something, it didn't do it. You know what I mean? So, we were able to go on and get above this 1260, and that quelled the downside momentum. All we need is if we can get above 1291 and get a close there, we can really start to move higher. Well, not only do we close on there, we closed above it on a Friday, and then look, we did a whole bunch of nothing, and now we're starting to slide back down the pole. I'm not saying that also, we still had eventually this target down here at 1149. I'm not going to turn around and say, okay, now it's all about that, but it's going to have, I don't see where anyone's going to go on and want to get bullish until we come down and the market proves itself. And really that proving ground is really going to come down is that we test that 1226 and we can pop above that. Then we'd see. Now on the upside, well, resistance now is going to be 1291 right there. Let's go and move into the cable. Well, here we are. It looks like we could come back to this pivot, 2980, and 2980 is going to be the support. No changes there. And the upside, well, we're going back to our old friend that was stalwart as all get out, and that's been 30.95. Remember, we tried to give the benefit of the doubt. We had 30.95, I think, all last week, and it held like a rock. And then we said, you know what? Things are starting to turn around. Maybe the dollar started to slide a little bit. Where can they push? Okay, it's going to come in at 31.52. Well, you know what? We've gone back to our old friend 30.95 for resistance. And let's move into the odd. Well, we did get some news, on the Aussie, and I did post some charts last night. In the Asian session, depending on what neck of the woods you're in. I'd been out for some personal issues during the U.S. session this week. Let me go on and so I came in last night right before the data and posted charts for not only the Aussie yen, Euro Aussie, and Sterling Aussie. The numbers were good, the employment numbers, and we didn't get much bang for the buck on this thing. That was really surprising. Not only did we not get much bang for the buck, and our resistance came in, we're thinking here that we'd make a run here towards 72.33, and let's go here. Here was our resistance here. I'm thinking, okay, well, let's see what we do at 72.33. 72.33, heck, we couldn't even take out 72 cents, and that was on good data. So, it's been a tug and pull affair with this whole silliness about, I keep calling it the boy who cried wolf. Oh, it's coming, it's coming. This U.S.-China data news, that thing is coming. It's not coming anytime soon. And I think, we saw a good little pop back here in the Aussie. I think that might have got a few people excited here. And, we turn around, we get this good employment report, and the market doesn't even take out forget 72.33, doesn't even take out 72 cents. So, and this is on, you probably would have thought this was a weaker report or a mediocre report, and the report was actually good. So we're looking in here on the stretch. Well, it certainly looks like the dollar's starting to push its own here, but we've had here the 72.33. Well, heck, we couldn't even take out 72 cents. Right there is going to be resistance coming right across here. And basically, it's like if you were to turn around and someone would say, "Well, I'm getting short or something," what would be your risk area? Well, if you didn't want to, we know nothing's changed as far as 72.33, but we have to be realistic because we start to go towards the end of the week, and if the dollar start to move higher now, then it doesn't make much sense saying, okay, it's 72.33. Yeah, 72.33 is a key resistance level. Well, if you trade at 71.21, does it change anything about 72.33 being significant? No, but is it realistic? Not really. So your resistance end, if we're looking for a resistance here, would be right there, 72, right there, 72.15. It doesn't seem like it's much. What I'm saying is I don't want to say it's 72 cents, but we'll mark this down to 72.15. And we are trading in a range here. Support's going to come in right there, 71.43. Right there. I mean, the market moved up and it's trading in a very, very tight range. But if we see some pressure come in, I'm saying all the way through to tomorrow. Remember, when we do the bias chart, we're looking at scalp levels, and this is not everybody's a scalper. I'm saying, you can use these as entry points, to basically complement what you're already doing. You want to go on and trade the way you want to trade, but you can use this to say, okay, well, I'm looking at this area here. Okay, that's kind of a confluence there because I've got support or resistance here. Okay, then that'll help me or may assist me, may not, but I'm saying assist you with an entry level. Or fine-tuning an entry level, I should say. But these levels of scalping for support and resistance, essentially for today through the next 24 hours. So if we see the dollar continue to strengthen, then where are we going to find the support? Well, I'm looking right here at 71.43, which isn't even that far away, although the Aussie dollar is holding up well. But once again, really disappointed to think that this employment report was surprisingly good. I mean, I'm saying surprisingly good, but it came up surprised to the upside, and we didn't even take out 72 cents. So I'm not saying I don't think we're going to turn around and fall apart, but it's right here where I think we'd find some support. Then, if someone's playing it from a short side, it'd be 71.43. Let's go on to the Kiwi. Well, we had 67.02, and I think that's the low right there, 67.02. No changes there, 67.02. We'll keep that. Upside's gonna be right there. Keep it very, very, very tight, 67.26. I'm gonna tighten it up. It might be a little bit too much. Let's just go right there, 67.37. Right there, 67.39. And let's go with the Kiwi yen. And we've been trading fairly tight here. We did get below this. Our support had been 75.21. We took a dip and still continued to go and pull back here. You know, when trading in this type of range, I don't really see that there's that much value, I should say, for using a fib in this situation. If we were to pull back, this area needs to hold in here. Right now, we're going to give it to set right there. You see here, which is going to be 74.89. It needs to hold that level. We'll call it 74.89. It needs to hold this level here at this point, to avoid a new move down. But we're going to go with 74.89. And resistance is going to be up in here, right there, 75.45. Well, these boons, look at that, they snap back quite a bit after that German data. Now let's go move into the dollar CAD. A nice snapback here on the dollar CAD. Saw a pretty good pullback yesterday. We had our support at 32.88. Market got as low as 32.75. But boy, look at this nice little hammer back on that after taking out these lows. You know, we keep getting knocked back, but I tell you what, this thing keeps bouncing right back. And crude is starting to weaken a little bit, but boy, I was surprised how quickly we were able to go in and come right back up on this thing. And certainly with the dollar acting better, certainly going to open the door. You know, I hate to put it just right there at 82, but that's the resistance there. Let me see if because we know beyond that we got that 34.15. It's going to be right there, 33.92. It's actually 33.93 on the upside. It's going to be 33.18. $33.18 on the downside. Let's move into the dollar peso. Well, we continue to remain under pressure here with the peso. We talked about the last couple of days. Look, the thing had been under so much pressure. Any bounce backs would just be viewed as selling opportunities. We need a daily close above 1893 just to quell the downside momentum, which we have not got, and that would just slow it down. Moves on up, they would continue to be selling opportunities. Even at 1902, everything would be a selling opportunity until you got up to, you'd need a daily close above 1913 for the bulls to say, hey, we've got a slow bottom in place. But we would need a close above 1893 daily close just to say, hey, I think we've slowed down the momentum. So it's just been continually rallies back. They just keep selling it down. They're trying to turn things around right now. Resistance is going to come in right there, 1897. Actually, just call it 1898. Support comes in right there at 1882. 1882 too. Moving into the dollar yen, here's another one, reminiscent of the euro, and even lesser. This was a huge level here, this 1187, and for the market to close above that on Friday, man, it looked like, wow, we're on our way up into the horizon, or the blue skies. We're on our way to the clouds, and we've done a whole bunch of nothing. We're actually starting to slide back. We've actually hit the lowest level this week, which may not be sounding like a whole lot, but we did take out 1187. Aren't we supposed to be at 113 on our way to 114? And nothing's happened. Absolutely nothing's happened. I think that what might end up happening eventually over time, as the S&P start to pare back, and people are going to say, oh, wow, the dollar yen was calling it, even though they weren't saying that. But I'm saying is, oh, the dollar yen was calling it. It never really believed the S&Ps. Now, some of the other people's notables have been saying the dollar yen is going to take off. Thinking about FX Macro was saying he thought the dollar yen was going to really start to really take off, and we're going to Venus and all this other stuff. But my point being is that that has not happened. These yen pairs were supposed to take off into the clouds, and we've talked about remember we even tagged that right close right here at the highs with the euro yen. A lot of these yen pairs have not come to fruition. And not only that, they've basically laid an egg, because this is a huge level for them to take out. 1187. I mean, I'm talking about the euro, and the euro didn't do anything. Even more so than the euro is the yen. I mean, look at this. This has been like gone nowhere. So I think that if you start to see the S&Ps, which are starting to pare back a little bit, if we see a further slide, then people are going to change the narrative and say, well, you know what? The dollar yen called it all along. The dollar yen could see that the S&Ps had no business being up in here. You can see how they didn't confirm. Same people probably saying that we were going to get that it was confirming or whatever. But my point being is, from a technical standpoint, just looking at technicals, that's it. What the heck? We get above 1187, and one of the things we talked at the start of the week was there's going to be a lot of volume resistance between 112 and 112.50. Look, I thought we're probably going to be at 12.50. I mean, even my own analysis said, hey, look, it's, I was short last week, and when we were holding above 1187, I got to face the technicals. We're above 1187. How can I be short? You know what I mean? I'm like, I don't, who knows where we're going to open up on Monday. We'll probably start pushing much higher, and I'll be wishing what the heck was wrong with myself. I should have covered once we were going to get a daily close above 1187, and we've done a whole bunch of nothing with this thing. I mean, yes, we couldn't even, and I guess this trend line is kind of keeping things in check, but so to speak, but it's not so much about the trend line, it's just that there's no follow through. But look, we're in danger of losing this 1187 right now. We've reached our lowest levels of the week here. We'll see what happens, but I'll tell you what, this has been very disappointing, for bulls. I mean, look at this. Oh my goodness, we've even gotten into the 1170s. So resistance right now is going to be right there. For right now is going to be 1212. Well, we've had that 1224. We'll go and keep that in check. 1226. So that's been good to keep that there. I mean, because we haven't done anything with it. We have 1162. We'll stay with the 1162. But and you look here right now. You see this on the 2 hour. We've now got a sell mode on the 2 hour. Now, generally, I just use a 2 hour. Whenever I'm using the exponential moving averages, I use those on the 30-minute, but I keep it on the 2 hour anyway. The 2 hour kind of gives the idea of where we're going overall. Okay, I usually don't use it to go in and get into a position. I use it primarily on the 30-minute, not primarily, really only the 30-minute. But the 2 hour kind of, let's say sometimes you get a market that's over, gets a little bit overextended. And like you can see here, we see this pullback. You see how it came back down to the slower exponential moving average right here. Same here. It kind of keeps me in check where things are going. I don't use it so much for the 2 hour. I use it for the 30-minute. But you can see here, things are starting to change here. So what that does is, and usually, like I said, I don't use it in that capacity, but it does make me think, just as I'm saying, we're starting to lose that 1187. If we start to continue, let's say at the end of the week or next week, then we may continue to see, this may be the beginning of, let's say, a bigger move here in the sense that we see a pullback. So keep an eye on your equities, things like that. So, but our initial support will be the 1162. So no changes there. Moving on, let's go with the dollar index. Resistance comes in. Well, look, there's 31. It looks like they just got there. See, there's 31, and looks like we may have got to about 33. That's intraday resistance, which we just went to that right there, 31, and we're pulling back from 33. But where's the key area that could propel us? And we're going to be going into Friday is going to be this 97.45. Let me give you an example. It's the same thing with the euro. Remember, we've got 12.26. And I'm thinking like, well, I saw 12.35. Why would you push it to 12.26? Remember how we said it would be testing it? They'd want to see how, if they got down there, what's going to happen. It's the same thing here with the dollar index. Look, 31, you see this coming across here? That had been resistance. And the high was what, 33? But the real area where you can say where rubber meets the road is going to be 97.45. And what you want to see is how the market reacts to 97.45. If we really start pushing beyond that, of course, it's going to be going into a Friday. Wow, this thing is really going to make a push higher. So it's 97.45 that we have to earmark as our resistance. Support now is going to be right there, 96.92. You can make the case of 97, maybe 97.02. Actually, right there, 96.98. That's going to be support, 96.98. And let's go move into gold. Well, there's still the opportunity for this to move down 1267. And if the dollar's going to strengthen, that looks like that's where the market would want to go to. So it's going to be 1267, that pivot. We had 1269, but this dollar's starting to strengthen a bit. So we have to go with this pivot that we think may kind of work as a magnet almost. 1267 with resistance now being at right there. 1285. And we had that there, 1285. Let's go and move into the crosses now. Well, we had 86.90 as our resistance and 86.56. Well, this thing has really started to slide back here. Did make it up to that 86.90, and that we've obviously big change here with the complexion of the euro now, and the potential that we could move lower here. Support is going to come in right there. Right now, 86.21. Resistance right there, 86. And that almost seems too close, but right there, 86.64. Seems kind of nutty that it's that close, but we've been trading fairly tight ranges, so it's going to be 86.64. Still remains bullish though. we were talking about this 78% here and holding the market, and we looked up here. This was a proving ground here, this 26.95, and whether or not the market could do something with this. And as the euro started to deteriorate, we started seeing this thing slide back. And boy, did we take a pretty good little drop down here. Support right now would come in right there at 25.59. 25.59. Let's drop this down here. Right there. 25.59. And if we're looking at the fib, wow, look at that. That would also be the 38%. So we'll go with that 25.59. Not that we couldn't pull a little bit lower, probably edge it down to about 25. That ain't that much. 25.58. $25.58. Upside, any moves back to 26.30, you want to sell those. 26.30. For now, it still remains bearish. But we need to go and defend that 38% to retain that. It still remains bullish. You need to defend that 38% pullback to retain that bullishness. Let's go into the euro odd. This thing's exceptionally tight. I'd like to get something that moves a little bit. We're not really seeing it. We could get some moves here, and then right now we've been kind of stuck in neutral for the most part. Look at this. It's been just barely any movement. Although the euro hasn't moved much either. But that being said, it's like you get a quick blip, and then all of a sudden nothing. And you kind of get a little bit of movement here, and jumping here, and then you kind of sit there. Resistance for right now is going to be, and this might be a pair that we may want to look at some other opportunities for other markets. It's going to be 57.66. This has the potential to move much lower here. $56.61. So this market has some potential to move much lower here with the euro. There's that potential for it to go and move to 56.61 here. especially after losing this 57.40. If we break below here, we'll go with the 56.61. But it's a pair that we may be looking for to switch out with something else that has a little bit more movement. We do have the opportunity to go in and break lower here to come back and test this level here. I think this is what we're going to go with. It's going to be 67.42 for our support here in the Euro Kiwi. I already have 39, so we're going to keep that here. But we are going to move this down here to 68.24 on the upside. We may have to do a little bit more homework on a move lower here. Potentially, I can see us come back down here to 67.15. Let's go with the Aussie yen. We made a jump up in here, and as I mentioned, is that it was really a disappointing move if you consider the strength of the Aussie data. But we're already starting to see these S&Ps come back in a little bit. This really gave a good opportunity for a sell here. Yesterday, as we mentioned, in the Asian data, we couldn't even take out 72 cents, much less key resistance on the Aussie dollar at 72.33, and we're seeing this market pair back in here. So resistance now is going to come in at right there, 80.48. If you're looking at going and sell this on rallies back, we don't want this market to get above 80.48. We come into this, remember we had this marked off as our 161% here, and the market had some trouble trying to get beyond that. We're thinking, okay, if this thing's going to really move higher, as people are believing, we could maybe move up towards this. I think we even had 80.98, but okay, yeah, 80.91, because it's okay. Could it push even higher? How much further can we stretch? Even though we would already gotten above beyond, and we're struggling a little bit beyond this 161. We're starting to pare back. Well, right now, if you want to go in and take some whacks at it, thinking that maybe we'll start to see equity start to slide back, it's going to be 80.48 on the resistance. Obviously, still bullish. But I tell you what, we have to think about. At the end of the week or towards the end of last week, we had a lot of people all talking about, oh, these yen pairs are going to go to the moon, and equities are going forward, and we're seeing a whole lot of disappointment. And the poster child for disappointment's got to be this dollar yen. Now that breakout area of 1187, and now we're actually trading at it right now. Remember, we're supposed to be at 113, 114, on our way to 114. So you got to think about these yen pairs, and if we do start to slide, and like I said, this whole thing about it's around the corner, this U.S.-China thing, it's not around the corner. So anyway, it's gonna be 80.48, and potentially a pullback if we do go in and see that is going to go and take us down to 79.59. Now we do have some support that would come in here at 79.92. But I would go for 79.82. And I think that good chance it will come down here towards before you actually start to see some demand come in. It's going to be 79.55, but let's go with 79.82. If we see a break lower, where we go, I mean, you can make the case in right now. There's 80.03, what here, 79.90. Look, I'm gonna go with 79.82 here. I'm looking for this thing to pull back. All I can see is these yen pairs are coming up with a pretty big dud. And all you have to do is look at the technicals. Same thing on a break lower. I'm looking for, before we see any real demand, 45.27. That isn't even saying much. We could pull it right down here to 45. Yeah, right there, 45.27. Let's go back to this euro on. Something got dropped off on here. Well, we're going to go to this 56.72. I'm not sure how that came about, but resistance comes in right there, 45.97. Probably even make the case even a little bit lower here. Right there, 45.89. We're still trying to work on a bottom here on this sterling odd. I still think there's opportunity for us to drop a little bit lower here. But the Aussie, I mean, it's the price action has been disappointing. Look at it right now. We're at 71.62, but as I said, the employment data was very good, and it couldn't even break 72 cents. But we're looking potentially we can still break a little bit lower here with the sterling odd. We're trading very, very tight here. let's look at it this way. If we're going to break lower here, we have to defend this area here of 81.34. 81. So we're going to go and make the case as if it was trying to go and hold here, it'd be 81.34 with an upside of 82.07. And we're trying to make the case that they're going to try and hold here. That's where we're tightening these up and opening this one up a bit. And finally here with the CAD yen. Now we've got this medium-legged doji right here, and we're starting to push below that. And it certainly looks like with these yen pairs, we can see further moves lower here. And this one was one that we had marked off before and posted in the room. Look at that 161% here. I wish I would have hung on to this one. I haven't scalped against this one. I got filled at 84.28. 84.28. I think the high was it 36 or something like that? Yeah, there it was 36. Well, we've had a pretty good fall already. And I posted that chart in there and referred to it a couple times. Yeah, I wish I would have hung on to this one. Holy smokes. And we saw down here, I remember it came down here, this 84, and it was bopping around, and we've continued to drag lower as the Canadian currencies weakened. Some support in here. You know, we're just going to go right there, which is 83.58. Yeah, there's my 84.31. Look at that. Doggone, I wish I would have hung on to that one. The good thing, I mean, scalping, you dance in and out, but sometimes you kind of kick yourself thinking, boy, I should have hung on to that one. But anyway, let's go on and, so 83.58. That's what I'm saying is the bias chart we use here is just used for, I don't want to say straight up for scalping, but it's used for intraday levels for that day into the next 24 hours. And that's how you want to use this, is that, you know, everybody wants, it's good to trade your own way to meet your own, the way you trade, depending on whether you're a short-term trader, scalper, longer-term trader, but you can use this to complement your entries. And I had posted this chart too. Matter of fact, I remember posting yesterday morning saying, hey, we have Canadian data, keep an eye on this. So, but anyway, let's go move in. Actually, I was looking here on the see, I even had it from the 30-minute as opposed to the 2-hour chart. Upside resistance can be right here. Right there. 83.89. We'll keep it pretty tight. See what we do there. Look, keep an eye on this cash dollar index. As I said, from my Asian analysis to start the week, look, I think the jury's still out on this dollar index. And one of the reasons is because, well, a couple of reasons here. We talked about that. It has the highest amount of bulls, or those long the dollar. Doggone it. Since 2016. Now, lots of times people get the boat gets crowded too much on one side, it tips the other way. But my point is that these people they're not going to give up their longs unless we get a significant, decline. Okay. Although a lot of people, and that goes into my next point. Okay. So they weren't expecting that unless we saw a significant decline. You're going to have to knock these people out. I mean, because some people are going to hang on, and the dollar index has been holding on. Remember, we had 74 the other day and actually been holding, and the market didn't even make it to 74. And I even moved this a little bit lower just to take into consideration, hey, look, looks like the dollar may slide, so I moved it only to 62. Okay. Now look, here's a dollar come back. But like I said, that leads into my other point. If you're saying, well, I only, once again, to reiterate, well, I only care about technicals, that's all I care about. Okay, well then here's your technical, and I'll make that case again for anybody that came in late. All last week we talked about, we'll close up the show here, but I just thought it'd be interesting, not interesting, but important to go and mention this. We kept saying, look, if we can get above 1260, a daily close above 1260, I don't even have it marked anymore because we got above it. So if we get a daily close above 1260, that will quell the downside, kind of slow down, could take away some of that momentum. I go, but we're not out of the woods. The year's not out of the woods until we get above 1291. If we can get a daily close above 1291, now we can start to work higher. And look, we didn't do anything with it. And remember, 2 days ago, we actually lost 1291, and we're able to come back, and we just barely closed, and here we are sliding. And the reason we're sliding, we got that bad German data. I mean, it's just reinforcing what was already a horrible slide the prior month from the prior month before, which was 1248. We dropped all the way down to 1244 instead of seeing a good bounce back, which is basically stuck in the same area. I think we went up to, what was it, 1244? I'm not 1244, but 44.8 or something like that. It was just a 0.2 increase. But that manufacturing staying so still weak on the end, on talking about the PMIs. But the thing is that this door is still open. Look at this dollar index. It's still adding on here. Now we've got our resistance today at 97.45. But remember, is just to reiterate here and close this out. We're just a spit away from that 97.89. And that's at key weekly level and the 61%. As I said before, the jury's still open. I think we can make a run to that. What we do after that, I don't know. I'm not one in the camp to say, oh, we're going to 99 or anything like that. But this is almost working like a magnet. And you've got that many people still bullish on the dollar, most long since 2016. You're not going to get them. You're not going to knock them out. You're not going to push them out of the positions until you knock them out. And knock them out is going to be a daily close below 96.24. That would knock the bulls out. I mean, knock out a lot of these dollar longs. Until then, heck, we haven't even been able to make it to 96.62. And remember, I had my support during the week. We had our support at 96.74. It didn't even make it to there. You see what I'm saying? We opened the door and said, okay, let's put it to 96.62, if this dollar's going to weaken. So these guys and gals, they're getting paid. They're, as long as they stay that way, well, it makes sense. And lots of times on the week, we close out the week strong for the dollar. Last week was the first time in a while. And on top of that, we didn't do anything with it when the euro had its opportunity. So, there's a good chance we could make that run up in here. But that's all I've got. Thanks for joining us here on the European crossover, and I'll get this posted in the room, and have a great day.